Imagine waking up tomorrow morning and seeing a message spread across social media. Get your money out of the bank. Now. At first, it sounds ridiculous. Why would everyone suddenly rush to withdraw their money? But then you check the news. People are lining up outside banks. ATMs are running out of cash. Videos are flooding the internet. And within hours, millions of people are trying to do the exact same thing: withdraw their money. There's just one problem. The money isn't there. Not because it was stolen, not because the bank lost it, but because the banking system was never designed for everyone to take their money out at once. And that's where things get strange, because the moment you deposit money into a bank, it stops being exactly what most people think it is. Most people imagine a bank as a giant vault. Put your money in, the bank stores it, you come back later and take it out. Simple. Except that's not what banks actually do. Let's say you deposit $1,000. The bank doesn't place that money in a box with your name on it. Instead, most of it gets lent out. Maybe part of it helps finance someone's car loan. Maybe it becomes part of a mortgage. Maybe it funds a business expansion. Your deposit becomes someone else's debt. And this process happens over and over again across the entire economy. In fact, in many banking systems, only a small percentage of deposits are held as immediate cash reserves. The rest is constantly moving, which means something uncomfortable. If every customer showed up on the same day demanding their money back, the bank physically could not satisfy everyone. Not because the bank is necessarily bankrupt, because the money is busy.
Think of a restaurant that has reservations for 500 people this week. Everything works perfectly, until all 500 customers show up at exactly the same moment, demanding a table. The restaurant isn't fraudulent, it simply wasn't built for that scenario. Banks operate in a surprisingly similar way. Most days, this system works beautifully. People deposit money, others borrow it. Businesses grow, homes get built, the economy expands. The entire modern financial system depends on this constant circulation. But trust is the invisible ingredient holding everything together, and trust is fragile. History has shown how quickly it can disappear. In 1930, after the stock market crash, fear spread across America. People became worried about their banks. Some banks were healthy, some were not. But that distinction didn't matter much. When enough people lose confidence, everyone starts acting the same way. They run to withdraw their money before everyone else does. The result was catastrophic. Thousands of banks failed. Savings vanished. Businesses collapsed. Unemployment exploded. The panic itself became more dangerous than many of the original financial problems. It's one of the reasons governments eventually created deposit insurance. The logic was simple. If people know their deposits are protected, they're less likely to panic. And if they don't panic, the system stays stable. Ironically, confidence became one of the most important financial tools ever invented. But here's where things become even stranger. Today, bank runs don't necessarily involve long lines outside branches.
They can happen from a smartphone. In the past, withdrawing millions of dollars took time. You had to drive somewhere, stand in line, fill out paperwork. Now, a few taps on a screen. Money can move across the financial system at astonishing speed. This became very clear in 2023. One bank experienced massive withdrawals in a matter of hours. Customers moved tens of billions of dollars almost instantly. The technology that made banking more convenient also made panic faster. Fear now travels at internet speed, and fear spreads remarkably well online. A rumor, a viral post, a frightening headline. Sometimes that's all it takes to start people asking dangerous questions. What if my bank has a problem? And once enough people ask that question, the answer can become self-fulfilling. This is one of the most fascinating paradoxes in finance. A bank can fail because people believe it might fail. Think about that. Imagine a bridge that's perfectly safe. If everyone suddenly believes it's about to collapse and rushes onto it at once, their reaction could create the very disaster they feared. Bank runs work similarly. The fear creates the pressure. The pressure creates the crisis. The crisis appears to justify the fear. It's a loop.
and loops are powerful. Now, let's zoom out. What would happen if literally everyone tried to withdraw their money? Not just from one bank, from all banks at the same time.
The answer is that modern economies would effectively freeze. Banks would stop making loans. Businesses would struggle to pay employees. Credit markets would seize up. Investment activity would collapse. Companies that rely on short-term financing could suddenly find themselves unable to operate. The issue isn't just cash. It's the entire web of promises, obligations, and transactions that keeps the economy functioning. Most money today exists digitally. It's numbers moving between accounts. Very little exists as physical cash. In many countries, if every citizen demanded paper money simultaneously, there wouldn't be enough currency in circulation to satisfy them. Not even close. That sounds alarming, but it's actually a feature of the system, not a bug. The financial system was designed around movement, not storage, around trust, not stockpiles, around the assumption that not everyone will demand everything at the same time. And for the most part, that assumption works. The system has supported decades of economic growth, investment, innovation, and global trade. Yet it also means the entire structure rests on something surprisingly intangible: belief. Not blind belief, but collective confidence. Confidence that your money will be there tomorrow. Confidence that other people won't panic today. Confidence that the system continues functioning because everyone expects it to function. Which leads to an uncomfortable question. When you look at your bank balance, are you looking at money or are you looking at a promise? Because the modern financial system may be one of the most sophisticated systems humanity has ever built. But at its core, it still depends on something surprisingly ancient: trust. And the moment everyone stops trusting at the same time, what exactly are those numbers on the screen really worth?